So the trade basically is that the value needs to be falling, so we need to have a premium. We need to find that there is an increase in the blue line, and we want to try and sell this. So the acceptance is that there is sell side value, and this tells us that they're now accepting that there's sell side value. And on the basis that that tells me that they're now accepting sell side value, I now want to try and take a short into that acceptance. So the first trade would have been there. See that? You can see that they're also accepting this sell side value here. So if we wanted to take a blind kind of trade, this would have been a straightforward sell here. You don't take blind trades, but you get the basic idea that there is still a sell premium. Still red up here, so you can see it's premium. If it was blue, it would be discount, but it's red, so it's premium. And we want to try and take a short into this again, and that would be the next trade. And then the third trade, of course, you can see here, it's in a blue pin zone, interestingly enough. So there's definitely a danger to this, but obviously you're expecting or hoping for, on the basis that they're accepting this lower, you're hoping for a squeeze lower. And that was the 4 trades for the sell trade. That was the 4 trades for a sell trade. And we got a pretty good response down to that A10 reversal exit price, if you like, at that point just there. So there's your exit price just there. And that was the move from 11 o'clock to 12 o'clock. 1 second. I said that we were expecting the 22 to go bid because it was just being aggregated by the dealers at the time. I mentioned that we've gone 20 bid. So an easy stop at break even. Please, guys, if you don't mind. There's a trade on Ninja Trader. You can see the basic idea of this trade. We were buying 73s, pretty high probability thing that we should be buying into 73s. You can see a big absorption print coming in here. You can see that for yourself, very big absorption. The selling auction almost disappears entirely, but there is a buyer, and obviously that means that we're getting a bit of selling pressure coming in here from those absorptions here. So we wait until we get back down into the bottom edge, get absorbed, and start buying into that absorption. And then that's the buy response we've had so far from that buyer side absorption right there. Pretty obvious, pretty reasonable. So if it kicks on, doesn't it? If it doesn't, well, it doesn't, mate, does it? Got to see what it's going to do next. Okay, so let's get back to our acceptance. So you can see it drifts off into buy side territory here. It's now into buy side territory. There's a small drop off, but you can see that we're still in a. You can see we're not in a discount. We're in a premium still here. This is still red. So this isn't going to be a buy trade, unfortunately, on the basis that whilst it is dropping towards a discount, it's not actually quite in discount territory yet. Remember, discounts have got nothing to do with price. So obviously that's not going to be a trade yet. So the only trade that we can do is this trade here, because you can see that we finally get a premium. See how we're starting to get a premium? So we finally get a premium into that acceptance, and now we can actually start swinging for a buy trade out of that area there. So we start swinging for a buy trade there at 38s, and obviously that buy trade we did pretty good from. We got a nice buy side pop on that from the improvement in the premium, and then the acceptance at the kind of in between an area that kind of nobody knows about, and we take a shot at it, and we get a nice buy side pop. Now, obviously, this is without value. Remember, we're not looking at value here, but the key is that we need to look at value. We need to make sure we're always aware. The other key is that is it a sell side, a weak sell side, or is it a strong sell side? So we come up into the area, we're starting to get a premium. You can see that we've got acceptance of that premium, so it looks as if the sellers have started to come in, but it is, on this occasion, this is a weak sell. You can see in the previous couple of occasions, they are not really weak sells. You can see that we had, for example, here, we've got a relatively sell-side trend sell, and then this is obviously not a weak buy trade here. It's quite a strong buy trade here. But this is a weak sell. This is the first time we've really seen a good solid weak sell coming in. So it could obviously be churned a few times over, and it was churned. So you can see it churned up into this area. And obviously at that stage, We're also very aware of the fact that the movement between the POCs is pretty rapid, isn't it? So if we go into this this area here and we go into this area here, we're starting to recognize that this is still pretty rapid here. So if we go from that one there, oopsies, that's a bad one. Okay, we'll take it to there. And if I take it to there, you'll see the basic idea, the basic problem with this is that this is still very bullish indeed. So it's a very difficult trade to take. But obviously based on that, we then take it up into the top of the bracket here. There's the touch there. And that'll show us where the sell should be. You see how we see the same things? So the sell should be up into this area here. And it's only because we've got the ability to draw a straight line from the extension. You might say, how did you get that extension? It's dead easy, isn't it? All you do to get the extension is to come into the chart, find the close of the candle in the red zone, and the close of the candle in the red zone. And we draw it in like that. So you find the close and the close. And then to find where the sell trade is, all you do is you find the highest point that's going to be left alone. And that's the highest point right there. There it is. There's the highest point that's left alone. Nothing else crosses that. So in terms of statistics, you're projecting a sell trade at 54s. It's in an acceptance zone. It's in a big area where we're seeing a very weak sell. So it's on the angle. That's what on the angle means. So it's on the angle. We've got the weak sell acceptance zone. We've got all of that story. We've got a big arrival of volume. And you're starting to whack in some big passive limits into that trade. Now, obviously, the outcome from that was, well, pretty good. So again, another sell from 54s, got down to 44s, made another very tidy, cheeky money little profit there. And that was pretty good trade, wasn't it? So we then get an acceptance of premium again here. So we're now getting an acceptance of premium. I'd taken a buy trade out of the space here, out of the hole here. And I was looking at this saying, okay, we're now getting acceptance of that premium here. And we've definitely got a premium. Value is collapsing. I like the idea of getting into the short for the squeeze. I like the idea of the storyline. And, you know, we're going to see if it gives us a trade. Now, it obviously initially doesn't. We get back to the same price. But if you look in the background, you'll also notice that this pin zone to that pin zone is now doing that line, correct? Yes or no? This isn't Heikin-Ashi, so it's close to close. So you take the close of the first candle there and the close of that candle there, and then you take that blue line and you run it off the high price areas, right? And you start, obviously a small adjustment required on that one, but anyway, there it is. So we arrive in a pin zone, so this is where we expect the pin zone to be. Another sellable opportunity coming in against that premium. And, you know, obviously coming into the cash open, we then get a very nice sell-off from that area, and we make a lot of money from it. So it's a very good sell, very easy sell, and a fairly decent response to the short sell opportunity. Now, on the other side, you'll notice that we actually suddenly gained a premium and an acceptance of that premium at the bottom edge, didn't we? So we got another premium coming in. We got another premium coming in. You can see it's gone blue on the very, very low bottom edge candle here. It's gone blue. And obviously at the very same time, we now get an acceptance of that discount. And obviously on that basis, you should be closing out your positions. So you should use that to be closing out your positions here. And possibly even starting to think about the possibility of a buy reversal into that acceptance here. So obviously if you decided to buy for the reversal, you've obviously had a beautiful little swing away from that price. That's pretty good. So well done anybody that decided to take a shot at it. And a nice pop back towards the mean reversion trade opportunity there. Reasonable? I don't know. What do you think? You think you could make some money from it, Dan? Or do you think it's pish?